Hello, welcome everyone. Big day, big day. And the question is, what is the strategy? Well, what you see in front of you is our Algo 17. You'll notice if it's in focus, it says Razor Focus. This is our model. I continuously share this with you, not just for the results, but yes, this is what we kind of put together and use in our both live trading room, and I'll share the performance here. This is our equity curve for this particular model. This is S&P 500, the spider long short. Yesterday, the system strategy went short. Came close. Red line is the stop out. And a little nerve-wracking, but, it survived the stop out. Emergency stop, and now we have trailing stop functions in there. This is one of the models we use in J-Person Asset Management. And one of the neat things is, if you'll notice here, and this is where you could learn a little bit as I talk a lot about our proprietary indicators. We modernized indicators. And I keep telling you that while on balance volume's okay, right, we were starting to form as this market was moving up with higher highs. Notice that the volume indicator was continuously, now this is a proprietary volume indicator that I created in TradeStation. This is for TradeStation users using my own strategies. This is a part of the person's indicator package, worth its weight in gold. What's really nice about this razor focus model, this is how it helps traders. If you think this market's still going up and you see a strategy that, okay, it went long, great. It went long against kind of divergence volume. I think you see that, right? I mean, I'm not a big fan of that, but yet the strategy, the market could go up and break out to new highs. But when it got stopped out and reversed on a PPS short, that was exciting news. Now, that was yesterday, and that's why at J-Person Asset Management, we were short, or because we manage a lot of retirement funds with 401k, so we took the long in SDS. SDS is the inverse relationship, and these are the things that you as a trader should know and can learn from. So rather than going short spiders or short E-mini S&Ps with excessive leverage, you can also take a long position for small size accounts in these inverse ETFs, SDS. And I'll share that page with you in a minute. Right here. Let's get into it because these are kind of some of the strategies. Now, for all transparency purposes, we're in the SDS. I am now, based on the performance, we are flat on SDS. Notice that it scaled out of a position this morning. We exited this trade because we went with and rolled, took our profits out of SDS and rolled into the SQQ. What is that? This is the ETF that goes up when the NASDAQ or the Qs, when the Qs go down, this bad boy goes up. So as you can see, the percent change today up 14%. Now you look at the dollar amount, you go, but John, it's not that big of a deal. Well, if you apply, say, 10% of a $100,000 portfolio, that's $10,000, and buy a small position here, no options, you're just trading the market, it can add up. And that's what I'm trying to explain and hopefully share with you guys, that there are other ways that small investors can trade or trade smaller size and participate in good strategies, solid strategies. Now look at the strategy and the setup here, friends. This is our volume indicator, and it's showing accumulation of the volume trend is going up. Now on balance volume does the same thing, which is pretty good. With SDS, the momentum started to kind of flatten out, and that was one of the reasons the decision on our managed funds that we dumped SDS and held on the SQQ. So I wanted to bring that to your attention. So again, the key takeaway here is how and what trades can you take? Do you have to be all in? Do you have to be all out? You can scale into trades. You can get in. You don't have to get into highly leveraged positions and put yourself in, jeopardy, especially with the futures in the E-mini S&Ps on a day like today. You can take and participate in some of these other ETFs, and that's one of the things that I hope you walk away with the knowledge. How did we prognosticate that for this week? Interestingly enough, in our weekly newsletter, and I know a lot of you guys, we've kind of given you a lot of insights on what we do from week to week. Last week, I know I shared with you our positions. Now, again, it's not fair to our paid subscribers to give you on a free video exactly what we do every entry, every exit, but you can get the idea of what we're doing. And last week we got in on STX, Checkpoint Software. I mean, bottom line, we traded a lot last week. We were long the Russell. We booked profits. We were in IWM calls. I mean, we were long in Discover Financial. We booked profits there. And here's our performance tally year to date. Here you can see all the trades that we had exited. This week we exited Checkpoint and Seagate, and you'll get the updated performance this weekend. Everyone realizes that. And then the Russell, the same thing, exited the call spreads the outright calls, excuse me. Bought them on Monday, then rolled out and bought some more and got out of those. So it was a really nice week last week, and again this week. What's the main takeaway? This week we bought Seagate only half position and we got out. I didn't like it. We took a profit. Checkpoint got in half, got out with a profit. Loved it. Walgreens, we're just getting into it on this break. National Beverage adding to it. ExxonMobil adding to it. Got an or better fill right there. This pullback on those names I'm in for stock holding periods. Option trades. AMD got filled on a bear put spread. Apple did a credit call spread. So there's a reason for what we do in certain trades and certain strategies. So this week was a good week. One of the main things that I think we'll just leave you with this is, what did I think? This supports the idea we should see a pause, if not some type of a pullback this week. That's the bottom line. That probably is going to be, what would you say, the most underestimated statement of the year, right? We'll see a little pullback. Wow, 1,800 point move down in the Dow Jones. What did we see in the NASDAQ? Just about under 5%, 4.65% pullback. ES, the S&P, 5.5% pullback. Russell down 7%. Boy, this is a trader's dream market, and with indicators like we've created and the tools help these strategies really give you the vote of confidence to pull the trigger. So bottom line is, we've done many videos over the last few weeks, and we've shared with you our work, what we're doing. We're pretty transparent, as well as how you can take advantage of some of the indicators that are on other platforms, whether it's HGSI, Thinkorswim with the relative strength tool, and how we can kind of look at those divergences. Also, I thought it would be fair and something that you may appreciate to see what our, not just our performance is in a newsletter, but also hear about what we're doing in real life with our managed funds. Thank you very much for watching, and I think that if this is markets that continue to move like this, it's going to be just even more of a spectacular summer. Have a great rest of your weekend, and I look forward to the next time we update our videos. Thank you.